What is going on, traders? Welcome back to another video. In this one, I'm gonna break down two of my trades which I took this Friday. I haven't taken any trade this week, but two trades on the Friday, the gold and this crude oil trade, and I will break down both of them. So starting with the first trade on the gold, obviously we'll start with the daily chart. Here on Friday, you can see the Monday candle expanded up, then we had a consolidation, Thursday counter, weekly profile, which is like capping the weekly range back into the open. So my draw on liquidity becomes the weekly open. And if we assist the phase the price delivery, we were in expansion, consolidation, then manipulation of the highs. And now we are expanding lower. So my draw on liquidity becomes the weekly open. But since the Friday's candle is a small range, we could target this low or 50% of the whole range. So my target for the day was this low. And also if you look at it as a range, so we had a range high, consolidation range high taken. Now the draw on liquidity becomes the range low or this specific low, Tuesday low. I traded this based on the price section of the gold. So going into the Niver session, my bias was bearish. Now dropping down to the 4-hour chart. On the 4-hour chart, you can visibly see we had a consolidation range high taken. So this becomes a protected swing. Also, we had a closure below this up close candles, which took the consolidation range high. So this becomes our order block. And there we have a fair value gap, internal range liquidity. So the drawn liquidity becomes these failure swings are this low right here. So these were my confluences for the trade. And now for the Friday, we opened up on 18. And what do? We created the high of the day first. We had this swing formation within the 22 candle, and now we are expanding lower. So I was expecting the 6M and the 10M candle to expand lower, and I traded post NFP because that's the high impact news. Now dropping down to the 1-hour time frame, you can see using the daily profiles and the session indicator, we expanded away from the daily open to create the wick up the candle. Then we closed below the opening price and the series of up close candles, which is the change in the state of delivery. So that was a trigger for expansion lower. And now going into the NFP and 8 we have taken this high on the silver and this the daily high, the Asian high, and we haven't taken that on gold, so that creates an SMT divergence, and that's the strength switch because the silver is consolidating and the gold is expanding lower. So that's the kind of the SMT and the strength switch. And we have this order block right here. Now since the 8M candle is closing, so I would enter within the 9M candle. For that, I would drop down to the 5-minute chart because the time frame alignment for the 1 hour is the 5-minute. Now dropping down to the 5-minute chart, you can see the silver price action is a bit messy. We are consolidating, and same thing on the gold. We are trading between this range high and this range low. This is a consolidation because if you have watched my time in range within a candle video, we will expand when the candle creates the high of the candle or the change in the state of delivery and the early minutes. So we were consolidating, then NFP manipulated these highs, created SMT divergence right there and with the hourly highs, and then we are consolidating since. So after consolidation, we need to pair some sort of manipulation to trade away from. So the range high becomes this. If my bias is bearish, so I would need the range high to be manipulated and then expansion lower. And with this candle, what do we have? We have SMT divergence. This high is taken, and this high is taken on the silver, while on the gold, we have created SMT divergence. So this SMT high, the SMT means like we are manipulating this high on the other pair. So this was our SMT divergence. This specific candle gave me the confidence to trade this because like we are closing bearishly, so I entered on the next candle. Usually I'm waiting for the consecutive series of up close candle to close below, but in this case it would like reduce my RR and my stop loss would be too wide. If I'm like putting it here, that would be like 1.3R. So I traded the next candle and my stop loss above the 50%, and I targeted this right here. So what the price did, the price closed below the consecutive series of up close candles, and there was my another entry, stop loss above the same, and there another continuation entry was offered into the propulsion block, and we expanded lower to our draw on liquidity. So this was a trade breakdown of the gold. Now going over the crude oil trade, I will start with the daily chart. Obviously, the first question is that we have taken the previous day high right here on the Thursday, but does it look like a reversal candle? In my opinion, no, because first we have this high. Look at this space between this high and this high, which makes this a failure swing. Like there is a small range left between this high, about 19 points, so we would obviously be taking it because this is a failure swings. One thing you have noticed in the market, we are trading away from manipulations and we are trading towards the liquidity or the failure swing. So the first manipulation was below right here. We manipulated it, then expanded away. Now if you use the phases of price delivery, what do we have? Consolidation, manipulation right at these lows, then expansion. Now we have this inside bar kind of day, consolidation. Then with this candle, what do we have? A manipulation. A fair value gap on the higher time frame is a lower time frame manipulations like the 4 hour. So we tapped into this fair value gap and we manipulated this low. Now what our drawn liquidity becomes this high. And also on the, and one thing more, you can see on the RB, we have a swing point formation here and here. And what do we have above? We have multiple fair swing, the previous day high, the Wednesday, the Tuesday, the Monday high. These are like a trend line liquidity if you look at them. These are like stacked failure swing. So this was my confluence for trading higher. And one thing more, we have a candle 2 closure right here. Then this candle was a bullish candle. It didn't close below its opening price, so this was my confirmation. And the more confirmation comes from the daily profile, which I will show you on the hourly chart. But when I went into the newer session, the candle already created its low and started expanding higher. And these are the failure swings on the RP. Now dropping down to the 4-hour chart. Dropping to the 4-hour chart, what other thing you can see, we tapped this fair value gap on the crude oil and we have created SMT divergence with on the RP. So this was another trigger for the reversal, SMT divergence, pairing it with the reversal. So here we have the 18 open. Right there, we traded lower into the fair value gap, SMT divergence, triggering the reversal, and now we are expanding higher, and we are trading away from manipulations, manipulating this low, and then this low, consolidation, then retracement, and now we're expanding higher to these feather swings on the RP and the crude oil. So this was my bias. Now the more confirmation comes from the daily profile. So dropping down to the 1-hour chart. Now here on the 1-hour chart, this is when the sauce comes. We had Asia consolidation, then London protraction lower, followed by a closure above a V-shaped recovery, a reversal, and it is paired with SMT divergence. Like on the right side, I have the Friday candle. What do we have? Opening price, then trading lower to create the wick of the candle. And it is small related to the draw on liquidity, open, low, high, and close. So this was my bias and the daily profile confirmation paired with SMT divergence and a London reversal, a closure above the down close candle in the London, which met the SMT divergence. So this was my confirmation. Now, within the 6 a.m. candle, what do we have? Opening, then creating the low. Here we have another SMT divergence within the 6 a.m. candle. This 8 a.m. candle on the NFP took the 6 a.m. low on the RB, and we have created SMT divergence on the crude oil. So this was the another trigger for the reversal. So what I did, I let the 8 a.m. candle play because this was the NFP candle, and I waited for the 9 a.m. and then the draw on liquidity was there. So from now, I will drop down to the 5-minute chart. Now dropping down to the 5-minute chart, you can see we have consecutive series of down close candles followed by a closure above. And what the driver is doing, the driver is expanding away from this low. That means this is a protected low because we have SMT divergence first and the driver is expanding away from that. Since the draw on liquidity is like far above, I can take the continuation entries. So I waited for the 9 a.m. candle to open and give me a confirmation. From the opening price, we are going lower into this fair value gap, and also we are creating SMT divergence right there. We have created SMT divergence at this specific low. The RB is like weaker and it is taking this low and tapping this fair value gap, and the crude oil is creating that bullish SMT divergence. And if you have watched my video about time and range within a candle, what the candle is doing starting minutes, it is going lower to create that opposing run and then close above it. When the candle is consuming less time to create the change in state of delivery or the opposing run, it will be having more time to expand higher, and the candle have a small wick. Now within the next candle, we closed above the consecutive series of down close candles, which is the change in the state of delivery. And see how many minutes have we taken? 15 minutes of the candle. So we have 45 minutes left and the candle to expand to these highs. I entered at the close, my stop loss below the body loss, and I targeted this draw on liquidity. The next candle tags me in and it expanded away and ripped through my draw on liquidity. So this was the trade breakdown for the crude oil. Sorry for the inactivity in the past few weeks. I will be more active starting next week, and hope you guys have learned something from this video. Uh, Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you next week.